The ECB has kept its key interest rates unchanged at record lows as expected, as Draghi says the degree of monetary policy accommodation will need to be re-examined at the December monetary policy meeting. Discussing today's events, I'm joined by Peter Vanden Houte, Chief Economist from ING. So Peter, unsurprisingly, the ECB has kept rates at a record low, as was Draghi's dovish message. Everyone seems to accept that it's not a case of if, but rather when, potentially now at the December monetary policy meeting. If nothing came as a surprise, why were expectations so heightened at this stage?
Well, first of all, of course, there's the emerging market crisis with China slowing down. That might also have an impact on European growth, and that's something that Draghi actually acknowledged, that growth is still helped by so much stronger domestic demand, but at the same time, the emerging market crisis could slow it down in the course of the year. Also, we've seen that in the U.S., the Fed is now also waiting to tighten monetary policy. A monetary rate hike has been delayed, and that has put some upward pressure on the euro, which was also considered to be a reason for the markets to believe that the ECB had to do something or at least say something to stop this appreciation of the euro.
Draghi has previously said that QE will continue to September 2016 and beyond if needed, until they see a sustained adjustment in the path of inflation that is consistent with their aim of achieving inflation rates below but close to 2%. In today's press conference, Draghi said inflation rates are to remain very low in the near term and foresees a further pickup in inflation in 2016 and 2017. Is this setting off alarm bells for you?
Well, this inflation story is very tricky because if you look at it, most of the downward pressure of inflation right now, we have a negative inflation rate, but that downward pressure is due to the significant fall in energy prices. And at the end of the day, that is not that bad for the economy because lower energy prices, as a matter of fact, increase purchasing power for households, and that causes them to consume more. So that's actually a boost to economic growth. But at the same time, the Draghi was saying yes, but if oil prices fall further and you have a longer period of lower negative inflation, then actually this might start to impact inflation expectations in the longer run, and that's something that the ECB wants to avoid. So if we don't see some pickup of inflation, or at least an expectation of some pickup at the end of this year, then indeed there might be a case to loosen monetary policy a bit further.
Draghi said the discussion today was wide open, with a few members of the Governing Council hinting at the possibility of acting today. After this comment, the euro fell below $1.12 for the first time since early October. A knee-jerk reaction or an indicator of something more in regards to the euro?
Well, I think that up till now, the markets were still believing that the only action that the ECB would actually be doing is trying to talk down the euro by just threatening that they could do something more. But it's now more a question of it's no longer swaying with the monetary gun, but it's actually putting the finger on the trigger because Draghi was saying that it's not wait and see, but it's work and assess in terms of what they should or ought to do in terms of monetary policy. And there was even a hint that they had discussed the possibility of cutting the interest rate on the deposit facility, so which is already at minus 0.20, and that actually means that if they would do that it would be costly to put or to park money in the euro, because then investors would be faced with even more negative interest rates, and that's of course something that would deter people to invest in the euro, explaining the reaction on the exchange rate today. To be sure, we're not that far yet. It has not been decided, but the fact that he suggested the possibility that they could actually lower interest rates further, well, to some extent explains why we saw the strong reaction on the exchange rate.
That was Peter Vanden Houte from ING discussing the latest news from the ECB. Now there's plenty more to catch up on here at Dukascopy TV, so do click back. Bye for now.